Hi everyone and welcome back to another video in our channel, Order Flow with Ethan. My name is Ethan, I'm 20 years old and I've been trading order flow for a while now, and here am I on the internet explaining to you how it works. So welcome to this section 23, how to make the most out of the order flow footprint charts. So 90% of traders miss this secret. If you're still trading using traditional charts, you're missing out on a lot in our special software, because here you get instant data, instant confirmation, and instant buyer and seller information. It's like trading with insider information in the market. First of all, your traditional charts only shows what happened in the past, but here you can see real numbers. The ask and the delta and the bid tell you exactly who's buying and who's selling. We have incredible setups, and also we have a lot of things that confirm our strategies. First of all, you have your delta that tells you a lot about what's happening. First of all, you can see the supply and demand in real time. Okay, so basically, if you go to any market in the world, if you want to buy potato, let's say, what decides the price of potato? How many potatoes do we have in the market, and how many people are interested in buying them? And this law simply goes also to the stock market. So price won't go up or go down just because it touched some random level it touched years ago. No, it doesn't work like that. Here, it's working by supply and demand. Economics 101. If many people want to sell, not many people want to buy, the market will go down. Many people want to buy, but not too many people are selling, then the market will go up. And this is simply how it works in the order flow and in the whole world. So as you can see, you have a lot of stuff that tells you exactly what's going to happen. So just in here, I see already 3 to 5 positions that I can take with all confidence that it will blow up. Okay, so here's the first position. Here, as you can see, we have a major red delta with a green candle telling us there's absorption happening in here, and also you can see the mean delta. The market goes up. Also, we have a single print that confirms it. Price hitting the older POC level, then goes up again. Here you can see exhaustion happening at the top. Also 876 ask being sold at the top of a candle that went down later, and also we have a green delta. So many setups just tell you that the market is going on the right direction, and you too should do it as soon as possible. So order flow just shows who is buying, who is selling, and where is it selling. First of all, you can see there's a big difference between this chart and this one. It's literally kind of the same thing, but trust me, it's not. First of all, here, yes, the market went up, then went down. Same thing here, up, then down. But here, what's going to let me take my position? Just some random thing that happened years ago at this point. Oh yeah, I remember the market went up to this level back in 2017, before COVID or whatever. Like, it doesn't make sense. You need to see what's happening right now to see what's gonna happen in the future. But now what happened years, months, hours, minutes ago? It doesn't work like that in the market. So here, as you can see, the market went up. We have our green delta with a red candle at the top. Exhaustions happening here, single prints and imbalances. Market goes down. Same thing again here. You can see how the market went down, then up, green candle and a red delta. So this is why order flow just wins. You have much more data, much more confirmation, and a lot of stuff that you can use, so you can really trust taking your position or not. And this is why it wins every single time. So candles only show the result, but not the battle. What exactly happened? Like, I want to get to know why the price went up and why did it go down. And this is something you can only find in footprint charts, but not in your traditional chart. So what's your market GPS? We have a lot of them, but these are just simply ones that I can tell you. But there is a lot of stuff. First of all, there's also just context, understand by context. Like, I don't really take positions because, oh yeah, I've learned that if price go up and down and then do this and that, then it's gonna work. No, I'm not emotional I'm not pragmatic anymore. I'm more of being flexible and trusting the market. Like, I understand the market behavior and analyze the psychology of the buyers and sellers. I ask myself who's in control, who's losing his strong position, who's becoming more weaker, who's becoming more strong, and this is how I find great insights about the market. So here, as you can see, we have a single print at the top, great signal that the price will go down. Yield delta bar that shows you a lot of important data about how the market will perform, and your stacked imbalances, of course, that give you a great edge of the market. Then you can add a lot of stuff such as market context, behavior, psychology, also the delta setups that I'm going to explain to you later in the videos, and a lot of great things that you can use while trading the order flow footprint chart. So if you want to understand delta, you should know that delta gives you a great edge. So if you keep just analyzing here but not pay attention to the delta, you're missing out on a lot, because it just gives you a great summary of what happened in the candle. So here, for example, we have 137 as max delta minus 207 as mean delta. Delta at 172. So what is delta? Delta is basically the bid minus the ask. How many contracts bought minus contracts sold. If it's green and positive, that means more contracts were bought than sold. If it's red, that means more contracts were sold than bought, and vice versa, and it keeps on going on like that. Max delta, that's the highest delta has been positive throughout the whole candle, and the mean delta is the lowest number delta has while performing this candle. Okay, so as you can see, the price went up to 137, then went down by 330 contracts down till 207, then closed on a 172. So this is how you know that you understand basically how the market works. So yes, buyers had control at one point, but then those sellers came in, they changed the game. But then again, they got the control and the market went up. Here again, you have a great setup, and everywhere just tells you that the market will perform in a way which you just don't guess with your traditional charts, but you have to have more information. And why not just have more information just for the sake of it? You're gonna be in a better position than everyone else. So here, for example, as you can see, we have a red delta and a max delta of 299, but there's still a red candle. So these types of things just tell you that you should be in a position as soon as possible, because it just goes like that in order flow footprint. You get great positions every day, but you should be also aware to take great positions and not just hop on every chart you see in front of you. Okay, so bid versus ask. The bid is the demand, ask is supply. Bid on the right and the ask is on the left. So these are the these are the contracts that were sold, these are the contracts that were bought. And yes, it's very easy to distinguish because blue color equals people who bought, red color here are people who sold, the ask, and this is the bid. So we buy the bid, we buy the ask and sell the bid. Okay, so here, as you can see, these are your imbalances here, single prints happening all over, and it just gives you greater edge in the market. So what's absorption and what's exhaustion? Absorption is smart money holding, exhaustion is trend ending. So here we have great absorption happening, and funny enough, they all happened in a short lapse of time, less than 30 minutes. Yeah, less than 25 minutes, we've had an absorption and an exhaustion happening. So as you can see on the top, we have 878 contracts being sold, and the candle is still positive here, like 751, while we also have 876 contracts being sold. Then the market went down, went up again, but here how you can see that max delta was 500 and here also 500, 400 in the previous candle, and then the market went by minus 800 contracts to minus 423. Okay, so for us to go from 500 to 400, we have to sell 900 contracts more than buyers after you can see this 500. So that means they have put extra energy to get the market down again till these levels, so which is a very huge level actually. So this is why it just wins. Money momentum equals delta plus price alignment. So here, as you can see, delta just keeps on being positive and the market just keeps on going up with all these stacked imbalances. Okay, they're all happening and the market just keeps going up. So great entry points are always the POC. POC, if you don't know, is the candle with the most volume traded in a it's the level with the most volume traded in a candle. So here, as you can see, in this point we have traded more value than the whole candle itself. So this is where we had the most volume traded, and the market just, if there's an entry point or exit point, the market just goes to that level, then goes up. So if I take a position, wait for the market or put your entry limit here, that's what I always do. Then I have my stop loss just right beyond this candle, the end of this candle, so that if the market goes down, I have my stop loss being hit, or else I could just go up, because the market just tends to go back to the old POC level, then go down. Same thing here again, after one candle after, it went up again. So thank you so much for your time watching this video. I hope you enjoyed it. I hope you got a great information about how order flow works, and please do let me know in the comment section if you have any questions. My voice is a bit messy because I'm kind of sick, so hope all of you are doing well, and thank you so much for your time. See you in the next video. This was Ethan from Order Flow with Ethan.